Let's have fun. Let's have fun. So here's a masterclass for you guys. All right. So today I want to talk about the bias, a short-term bias, and I want to touch on something that Michael talks about on the space that I normally uh, you know, recommend you guys listen to. It's called time-based setups. I'll pin a link to the Twitter space on this video. Okay, so I'm gonna be touching on little on some of the things Michael talks about. So I'm gonna be showing you in on the chart, as your mentor. So I'm gonna be showing you how I actually employ some of the stuff that he talks about on the space, on the Twitter space, when I'm, navigating the markets. So here we have Nasdaq on the 4 hour chart. Normally I use like I sometimes use the 4 hour chart as my daily chart to get like an intraday bias, like short-term bias, for the day. I don't, if like maybe the daily candle or daily chart is not so clear, I drop to a 4 hour and I want to look at, just two things: premium, discount. Then I want to look at the fair value gaps and liquidity. In most cases, that's like the first three things: fair value gaps, liquidity, premium, and discount. And here I want to show you something, because this is of course on a 4 hour chart, just to get like a gist of where the market is going to. So I'm gonna be showing you how I was gonna trade this um on a 3 minutes chart, but I obviously an understanding having an understanding of high time frame structure, which is in this case the 4 hour chart. Okay, so here we can clearly see that we took our buy side liquidity here and we failed to close above the high. So this week is just a purge, and then we went all the way down. There was low resistance liquidity run. We took those sell stops here, relative equal lows here, and we then moved to the premium of this. Now this is now called an interbank dealing range. Why? Because it has liquidity from both ends, from buy side and from sell side. So this becomes an area of interest, because you just measure from this high to this low, you find the midpoint, it gives you your equilibrium, and then anything above that is premium, right? So you want to study the retracement. Okay, at premium, does it respect the premium arrays? And obviously you can see here, if you take the midpoint of this week, um it's somewhere around here, so it respected that. And then after that, what did it do? We saw displacement. So now all of a sudden, if you look at the up close candle that took buy side here, now there's a sharp move to the downside, creating a change in state of delivery. So this becomes your bearish order block, right? So this is just me looking at the hard time frame, right? I'm just looking at the hard time frame, and I'm trying to get like an idea of where the market wants to go to. Now remember, we now have this low as our sell side, and we also have that low, so we have relative equal lows right there. So I'm framing all of this, and I have like a special area of interest, because it has more liquidity. There are sell stops resting above here, and I like to target these areas in my trading, right? So this is setting like a tone already to say I'm bearish. Looking at the displacement candle, yes, it did not leave a fair value gap, but I want to study the retracement, because now we have a bullish bearish order block. I don't want to see any candle closing above this uh candle high, right? So, and if you look here, it went all the way up, failed to close above the high, it went back lower. Now you see this is another displacement. Looking at the bodies, they are closing below that swing lows right here. On retracement, the two consecutive high candles Now this is they form a bearish order block. We combine them, they become one candle on a higher time frame than this one. This is like one bearish order block. So if you look at the opening of this candle, you extend the line out, you look at the bodies of these candles, they are respecting this as a bearish order block. So already this has triggered a bearish order flow. Okay, so this is now sell side delivery, and you see displacement, right? And then the retracements, you look at the up close candles, it's like they are very small compared to the down close candles, and you see this as another displacement again. Now here's my area of interest. Before we check, we purge this liquidity. Now once we are here, everything is so clear now, like it's obvious. You have internal range liquidity here on a 4-hour chart, which is in the form of a sell side imbalance, buy side inefficiency. So it's an imbalance that was created going to the sell side. Now it has to be rebalanced going to the buy side. Hence, it's a CB, sell side imbalance, buy side inefficiency. So it's a fair value gap. It's a bearish fair value gap. Some people call it like a bearish fair value gap, but a proper name for it, it's a CB. This is a 4-hour CB, internal range liquidity, and we know that the market moves from internal range liquidity to external range. So you have external range here, and you also have external range in the form of relative equal lows, which is what I would consider uh you know over this swing low here. I would just look at these relative equal lows because they are too clean for me. They are too clean for me, and I know that the algorithm, it actually prefers, or it actually what's the right term for it, it actually sees these are more important compared to like a single low. Okay, even though here we have two swing lows, you have a swing low and a swing low here, they are relative equal lows also, but this is more stronger compared to that, because this could be like a single swing low on a hard time frame, right? So but these are two different swing lows, right? From like different days okay, of trading. So we have sell stops. Retail traders look at this as support, and that's what we target. Okay, we target those orders resting below here. So trading this session on the 30th of May, if I'm not mistaken, or it's the 20th. Okay, sorry. Yeah, it's the 30th of May, Thursday. On Thursday, obviously um during the Asian session, which is like 7 to midnight New York time. Everything is in New York time, right? Okay. Yeah, this is New York time. So from 7 to midnight open, obviously we will be like sort of moving to the upside, or maybe just accumulating. Then London will rally, go all the way up. London will rally, go all the way up. Fair value gap at premium of this dealing range now. If you look at the swing low and the swing high, equilibrium is somewhere here. Then this is a premium. So I want to see it respect this premium fair value gap. Also, I always teach my students this, okay, guys, if you're on a 4-hour chart, I want to tell you something a little bit about this thing I call time theory. I'm yet to release a video on time theory because it's something I'm just always there's always a coincidence, like, and every time I see it, like, it's just because I think I talked about this on another video. It's a mentorship video. If you look at this fair value gap, right, there's also this candle that's overlapping, right? So we use this is also some sort of PDRA, the week, and we like the midpoint of the week. So if you are looking at the retracement back inside a fair value gap like this, and you also have a wick on the side, the strongest support area is going to be at the CE of the week, you know. And here, if you just look, it's exactly at the CE. And also, if you look at the time theory on 4 hour chart or sometimes 1 hour chart, but those are my most favorite. I just look, if I'm moving from discount to premium, I look at an area of interest. I firstly look at the candle that forms the fair value gap. What time was it created? In this case, it was created at 2. If you look down here, right? It was created at 2 o'clock, right? It's a 2 o'clock candle. So the fair value gap is exactly at 2 o'clock, okay, according to the 4 hour time frame. So if we are moving up and I'm looking to trade the PM session at 2 o'clock, we should be here on that particular day. It could be the following day or following week or maybe following 4 months or whatever. But the algorithm refers back to that PDRA. It was created at like similar time, you know. It's not exactly like, it doesn't really need to be like exactly at 2. It could be like at 1. But in most cases, you find that the ones that I actually refer back to at the same fucking time. Like for example, look at the week. This candle here was created at 6 o'clock in the morning, right? You look at this candle, this is, it referred back to it at 6 o'clock in the morning the following day. This was in the previous day. And so it's the same session, same time, same everything. So it's just went straight to that weak CE, right? So from there it found resistance, right? So you look at the model once we make it to that on a smaller time frame during the right time of the day. Already you see that London was bullish, so we reached the hard time frame PDRA. Then now New York is going to be a reversal, a retracement, and we also have these relative equal lows at the back of our minds, right? So you just look for a model inside like on a smaller time frame, but you know what model to look for, the 2022 model, the one that I use, my personal model. So let's go to a smaller time frame, and I want to show you like the SMT and like how to excuse me, how to trade like one. This is like my one trade setup where I'm like trading the session highs and lows, okay? But sometimes I would like have like, so it helps to have like a framework of like how exactly I'm showing you here today, so that you know what exactly you're doing. Even if you're trading up, you know what target like, what you're targeting to the upside, and also if you're trading down, you know what you're targeting on the downside. So if you listen to Michael on the time-based setups, he talks about like having a bullish bias. In this case, it's bearish, and I'm going to be showing you how we end up having relative equal lows across. Like if you look at this low and that low, because we end up having relative equal lows that we later on the day we run through it because we failed to reach for the sell side liquidity here during the AM session. This video, guys, you can't just watch it once. You need to go back and re-listen to this video because it has almost everything, okay? So in the morning, if you're gonna find the setup after taking Asian lows, because this is one trade setup, and I always highlight the Asian highs, Asian lows, and I see a change in state of delivery and an SMT around the lows here. I can take it up to that buy side imbalance. Then from there, I'm gonna get like my favorite setup, which I actually took on the 30th of March, and I'm gonna show you on Instagram. I think I do have like, I'm gonna show you on Instagram the setup that I took for next. I think this is the setup on the 30th of March. Yes, this is the setup actually. Okay, so let's go down because I wanna teach you exactly what I was looking at. So I looked at the CE, sorry, the week CE, which is the midpoint of this. So you can always tag this, and then you measure it, sorry, and then you extend lines to the right. So you can see here I already have my annotations because I don't want to make this a long ass video, guys. So I don't know, let me just remove it because I already have it highlighted here. You see, I already extended this line out throughout the whole entire day. So we're gonna go to a smaller time frame and see at what time did we refer back to this, okay? So let's go to like a smaller time frame. In this case, I'm gonna take the 3 minutes chart. So on this day, I'm gonna be showing you all the silver bullets that you uh, could have taken, right? So the day started around here 6 o'clock 6 p.m. So we opened with a gap, hence I have this new day opening gap high, new day opening gap low. So these work as a fair value gap for the day. It's a daily fair value gap, so price is going to constantly refer back to this, and you can use it as a support or as a resistance the whole entire day, and it's going to be price is going to be referring back to this for like the next 4 weeks. I think it's going to be using these as, every time it gets, it's going to refer back to this. So you just need to have this for the whole 4 weeks, I think. But 4 days, sorry, 4 days. Then the new week opening gaps, the ones that happen on a Monday, it's the same thing, but on a Monday. Monday's opening price, you can just do this here. This is how you annotate it. So if the candle is a down close candle, you take the opening price. You know that for a down close candle, the opening price is here at the top, as you can see here. So that's a new day opening gap high. And then for the up close candles, let's go to, I normally take the 5 minute openings. So let's go to 5 minute time frame. Okay. So the opening on that day and the closing on the previous day. So it's the closing price on the previous day and the opening price the following day. So in this case, I take the opening is the opening for a bullish candle is down here. So not the wick, the opening is down here for an up close candle. Then the opening for a bearish candle is somewhere here, not the wick here. So that's the opening, that's the close. The wick is the low, and the wick to the upside is the high. Okay. So here I took the opening, I took the closing here. So that's the gap, the difference gives you the new day opening gap, and you can see how the bodies are respecting the new day opening gap here. They are constantly trying to fill this gap because it's an imbalance, for the day. So it's gonna come back and and then go all the way down, come back, and then look at that week. You can use this as an entry. That's what I'm talking about right there. And then boom, go all the way down, and then for the whole entire day, it's gonna be constantly referring back. So what you want to do is you need to start your day here. You extend these lines out, and then you continue. You go to 7 o'clock to 7 o'clock to midnight open o'clock. So you take the lowest low and the highest high, and that's your Asian session, right? And then you want to extend those things out. Okay, the low here is the Asian low was taken out right here, and the Asian high was somewhere around here. So bear in mind, guys, we already have a fair value gap on 4 hour. We know that London is most likely going to be bullish. We are not going to force it, but when we enter the London open session here, which starts from 2 to 5, I am more bullish than bearish because I have that for 4 hour fair value gap, and I know that I want to take it lower from there. I might not trade this to the upside, but I might just have the idea at the back of my mind that I'm actually I wanna trade I want to be bullish for London, then later I'm gonna but if like on a normal day when I'm not like rush to like make money, I would rather wait for it to enter the fair value gap than you know trade with my bias. Because if I'm bearish, I always advise my students to just wait for setups that are in alignment with your bias, right? So in this case, I'm not trying to actually teach and uh, you know inspire you guys to trade against your bias, because you're gonna need to have like you need some sort of experience for you to do that, and it's not like a good thing to do. But in this case, so this is what I'll be doing, right? So I will just look if I'm trading Nasdaq, I always have ES, which is S&P 500, um S&P 500 as like some sort of barometer, right? I don't really trade the S&P 500, but I use it to check for SMTs so that I get an idea. Like if, like for example, if um Nasdaq really is gonna go like up from where maybe let's say we're trading, because in this case we're trading the London session, so I'm trying to put all of them side by side. It's the same day, same session, same everything. So this is the 30th, sorry, this is the 30th of March. So this is the Asian session. As you can see, the Asian session is on the 29th because it's the previous day from 7 to midnight. So it's the same thing here, 7 to midnight, same day, same everything. Let me just use the same color here so that you guys don't get lost. Yeah, I think it's almost the same. It's not the same, but it's almost the same. So we have relative equal highs here. Asian high, we go all the way down. Then London, we open at 2 o'clock. I'm gonna put like a vertical line, and I'm also gonna put a vertical line here at 2 o'clock. So 2 o'clock is somewhere here. So normally I would just want to, extend the opening price for the session. If it's a down close, then I just do the same thing. I just take the opening price at 2 o'clock. If it's a down close, I take the opening price here. If it's an up close, I take the opening price somewhere here, the low. Not the low, but the opening price. Come on, I think you guys get what I'm trying to do. And then there's my true session open. That's why I have the TSO here, true session open. That's what that means. So in most cases, the true session opens will actually give you a better entry. It's like a most precise entry because it works as a magnet. So if it's a confluencing with the PD array, then you can trust that it's gonna give you that, it's gonna yield you that perfect entry. So another thing is what I want to do with this true session open is that I just wanna see, because below the true session open I'm at discount. So I want to buy at discount. I want to be a buy at discount, and then I want to be taking profits above the true session open if I'm bullish. If I'm bearish, then I want to sell above this because I'm at premium for the session. We just opened, so I want to extend this out through the whole London session. Then I'm gonna have the true session open. The same thing on the Nasdaq. I do the same thing. So I look at the opening candle. In this case, it's a down close candle. So I'm gonna take the opening price over here. I'm gonna extend it out, and that's my true session open, right? And also what's important, what's more important although, is the opening price at midnight. This is the midnight open because this is like the true opening price for the day. So you're gonna extend this out throughout the whole entire day, and it's gonna be your entry and your take profit at the same time. So I do that also on Nasdaq. The opening through the midnight open, you extend it out a whole entire day. Look at how candles are respecting that, like the fair value gap here, everything. This is actually a silver bullet here, but I'm going to talk about that. There's another silver bullet down somewhere here. I'm going to be showing you guys all of that. So it's fine, but I'm not there yet. So I'm looking at London session. This is London open, and then we know that from 2 to 5 is London open, right? So here's 5 o'clock somewhere here. Okay, 5 o'clock is somewhere here, and then you have between 3 and 4 a.m. you have something called a silver bullet. So let's say you are bullish, né? You're trading session highs and lows. This is a one trade setup where you're trading session highs and lows. Nothing more, nothing less. So how was I going to trade this? How was I going to trade this? So we took out Asian low here, and then we go all the way down. We took out this recent low, this low that was created just soon after we opened for London Open, right? We consolidate, manipulate, distribute lower, we take sell side, and then after taking this sell side here, we rally with the displacement, right? So this is now telling me, because I'm already having that bullish bias in mind, right? I'm gonna zoom in on, because I want to see here. Now I'm paying attention, right? I'm paying attention now on, I'm paying attention here. So this is the same thing, right? This is the same thing, London session. So here, if I just take like a horizontal line and then extend it out, you can clearly see, let me just remove this for now. You can clearly see that the Dow failed to take out this low. So we opened accumulation, small accumulation, manipulation, distribution, but we failed to take out the low here. Now this is narrative. It's telling you that it's bullish because look at Nasdaq. Nasdaq did take out the low, but with a wick, and then there was displacement. So this is now institutional order flow is telling you that it's bullish now. It's looking for buy side liquidity. The sell side liquidity has been purged, and this SMT divergence, because this is what SMT divergence is. It's when a correlated asset fails to make a lower low or maybe a higher high if like we are bearish. Let's say we were bearish and then Nasdaq took out this high, but ES failed to take that high out. Maybe somewhere here it failed, and then that's also a confirmation that okay, they are actually weaker, you know. But if they both take out this low, then they're not so like I really don't like that. I want to see this because this confirms that okay, they're actually bullish, and this is now ES tipping its hand. It's telling you that hey, I'm actually, you know, I don't have the strength to go all the way down to take out this low. And this displacement is confirmation at the right time, right? So if you look now, this displacement was created exactly at 3 o'clock. Now, 3 o'clock is your what? Is your silver bullet hour. So already this displacement here, but I would, you know, normally I would wait for it to break the high here. But if there's an SMT divergence, I can really take the first displacement candle and I can use the first fair value gap as my entry, and this is the silver bullet. This is the London. This is the London silver bullet. And here you can use the order block as a silver bullet, or you can also use this. What's also good about this is that I'm buying below the true session open, so I'm at discount and there's displacement. So on retracement, I buy this fair value gap. So this is my entry for London silver bullet. You know, it's that easy, guys. I don't know, like it's that easy. You don't need to have like a bias in some case. You can just look at study price action on 3 minutes exactly like this. You don't need like a bias. You can just take profits at Asian highs here. Asian highs, you take a profit. That's it. That's how you implement the Asian range. You do this on the same thing on EU and GU. You can do the same thing with EU and GU. You can do the same thing with ES and NASDAQ. Okay. So you take this and then you target your Asian highs. And then if you have new week opening gap like how you did here, you can also target, take partial, take something off here, take something off this, take something off there. And if you have like that 4-hour CB, which in this case we are already inside that 4-hour CB, and this is the 29 May at 6 o'clock 4-hour week CE. So it's inside that fair value gap. On my annotations here, you can see that this is the 60-minute CP, the 4-hour. Sorry, here I think I made a mistake. I was supposed to write the 4-hour CB. So here I wrote 60 minutes. I was actually supposed to write the 4-hour CB. Okay, and then now you're trading the New York AM session, right? You're now trading the New York AM session. So wait, let's go there. Let's go there. Let's just open NASDAQ. Let's do this. So the London session, you took the silver bullet, you rode it all the way up. This was your entry. So for example, okay guys, so I sort of just stopped recording for a second. So I think I was just finished that this is your entry, and then you take it all the way up. You take 1 is to something. I showed you how to place a stop loss. I think that's where it stopped. And then you can target the Asian highs. 1 is to 4. You risk 1,000 to make 4,000. on your prop firm account, and then that's how you print money. Yeah, I think that's where it stopped. Okay, so and now if you're gonna be trading session liquidity, now you're gonna be moving to the New York AM session, which begins at 8:30 to 11, right? Now at 8:30 and 11, you know that you got a silver bullet hour from 10 to 11, right? And silver bullets are a continuation, guys. I cannot stress this enough. In most cases, they are just a continuation, of whatever a narrative is like already in play. Okay, so this blue line here is those relative equal lows on 4 hour. Let's go back, and this is, you see, there's relative equal lows here. So let me just put it here. Relative equal lows. I have them already in mind before the fact. Okay, before I guess I have them already. And ICT talks about having a bias, that a hard time frame point of interest or objective that you are aiming or you are looking for price to actually achieve during the AM session. And then now you look at across the morning, you have relative equal lows. So in this case, we already had relative equal lows, meaning two different lows, relatively equal lows. And then now you look at the morning session from 8:30 to 11, we went all the way down, but we did not reach this target. So now it's like you have three relative equal lows. And then going to the PM session, which now is from 1:30 to 4 p.m., you are still bearish most. Now you're going to be looking at the lunch hour. The lunch hour begins from 12 to 1:30, right? This your lunch. So the lunch hour will pretty much do this exactly what happened here. So the lunch hour macro, it runs on stops. So whoever was in profits during the AM session, which in this case it was the sellers, right? Let me just remove this. So during the New York AM session, we reached the hard time frame point of interest, which was on the 4 hour fair value gap, and then we saw it, disrespecting the discount array here, because we went all the way down and we closed below it. Look at that candle, we closed below the fair value gap. So now there was a small rally. There is a fair value gap from here. There is a small volume imbalance and a fair value gap. So we retraced and we filled that there before the Asia equities open at 9:30, and then the Asia equities open gave us that displacement, and it's in line with the bias. So in this case, it's not a Judas swing. In most cases, the Judas swing will just go like this at 9:30. If we are bearish, we'll just like sort of do like something like this, a consolidation. Then at 9:30, we do this Judas swing. Then just soon after, maybe 45 to maybe 10, then we're gonna get that displacement. Then that fair value gap is our silver bullets, because we are now at 10 to 11. But in this case, that 9:30 was not a Judas swing, because a Judas swing may basically mean like it's a manipulation in the opposite direction of the entire morning direction, right? So in most cases, you find that the 9:30 is a Judas swing, but in this case, it was not. And it's good that we already have a bias in mind. So the favorite gap can be trusted on retracement. And this is what I utilized, I think, on my post here, because this is the ICT 2022 model, right? But I want to talk about this because ICT talks about this, but in the opposite, because in his example on the Twitter space, he's talking about a bullish bias, right? So he says, uh, you, you have the target during the morning session that was not reached. If you're going to be trading the PM session, you don't change your bias just because we retrace during the lunch hour, because the lunch hour does that. Who's been making money all morning? The morning session from 8:30 to 11, sellers have been making money. So the lunch hour macro will run to their trading stop losses. So if they're having swing highs here, mid range, you can also trade the macro, by the way, guys, because you look here, this is there's a macro from 1050 to 1011, right? 10, sorry. So it's actually from 1050 somewhere here, 50. Okay, I can't get 50 because I'm on 3 minutes, right? Let's go to 2 minutes. I want to show you something. There's a New York, there's a macro here, 1050 to 10 past 11. Yeah. So this is a macro. This macro here, it triggers that, it's a trigger, like it gives an, you get an entry for the lunch hour. Basically, you can trade the lunch hour. This is the lunch hour from 12 to 1. You can get like a direction here from 1050 to 10 past 11. Every 10 to, there is a macro. Basically, it could be 10 to 10, 10 to 12, 10 to 1, 10 to 2, up until the last final hour macro, which is the final hour macro is from I think 10:35. Let me confirm here because I always forget it. I always I don't really trade the final hour macro. So there is a macro from 15:15 to 15:45. So quarter past 3 to quarter to 4. That's a macro. You can trade that. You also have a macro from quarter to 4 to 2 minutes to 4 p.m. So there's also a macro, but I normally trade this one because this one gives a direction of the whole entire lunch hour macro, and then like I can trade this thing up and down if I do have that appetite that day. So in this case, you can clearly see that this was bearish and all of that. But I want to talk about this macro before I actually talk about this, because this was obvious. We had that 4 hour and that week CE. We respected it. We created bearish market structure shift. The fair value gap is much visible on the 3 minutes chart. That's why I took my entries. And then this was a continuation. This was a silver bullet here, order block for silver bullet to take it further lower. And then we have sell side here, the London lows, right? Because this is London session. So we have London sell side liquidity here. And then that was my target. Obviously, I had some runners, but I closed somewhere here because I didn't wait for this best case terminus, because it might not reach this during the AM session, but rather during the PM session, which is exactly what happened here. So I don't really wait for the best case terminus. I just take my profits somewhere around the London lows, then I'm done. We can retrace, because you look at the time also. You look at the time already. The time is 10. This is now the final hour marker, right? This is the final hour marker. So sorry about that. So, this is not the final hour macro, but it's the New York AM macro. So this could just trigger that retracement, and it's exactly what happened here. So I want to show you how you can trade this. You look at the most recent sell side liquidity. So here we have sell side down here. This is the masterclass, guys. I'm showing you how to trade all the sessions today, all of them, like I'm giving you an A to Z kind of game. Okay, so you took sell side here, then there was a bullish market structure shift around here, change instead of delivery. This is the you take this last down close candle here, or you can take this one. As soon as you closed above it, this is some sort of change, but I want to see displacement. So this is now a bullish market structure shift in a form, but I want to emphasize this change in market. Sorry, this is a change in state of delivery with the fair value gap. You look at time. Time is the most important factor, guys. It's time before price. Time is the most, this thing that if there is an algorithm, then it's going to be coded uh you know with specific time. So this entry here, you look at the time. This candle was created at sorry, the change instead of delivery was kind of late, but it's already in motion. You can see that it is now triggered. You can buy this and you can target, because you look at this most recent swing high, swing low. So we are moving from discount to premium. You can target the fair value gaps here. So you can have like a small long position here, stop loss below the swing lows, and then you can target the fair value gap here. You get like a 3R. Or you can make like a 1:2 or 1:3, something like that. Boom, you are out. You're not trading the whole swing. Sometimes it can go all the way up, but you don't want to be trading that. Okay, so this is how you actually, this day was actually a perfect day, because you look at the lunch hour macro, or you can just use time to actually, uh, you know, consider closing your profits. Maybe you start closing at 1 o'clock. Maybe you close at 1 o'clock. You just leave it. As soon as you're in profit, you move your stop loss to break even. You leave it, and then you close it at 1 o'clock, because at 1 o'clock, the new, uh, the like generally the PM session starts at 1 o'clock, but the most the true session open is at 1:30. So here you can see that I took the opening price at 1:30, and then we made relative equal highs, and then we took those highs out, displacement to the downside. We have this fair value gap. Let me go back to 3 minutes and show you, because now this is becoming a long as video, but it's fine, guys, because I want to show you something. The SMT divergence is always key. Don't forget the SMT divergence, guys. So here, now we are here, right? So let's talk about the AM session. Then I'm gonna continue. I'm gonna highlight the macro again, and we talk about the PM session and how we were going to trade this. But basically and generally, like the if you listen to Michael on that time-based setup, this is exactly what the guy is talking about. And that during the New York AM session, you saw there was a change in state of delivery, bearish market structure shift here, ICT 2022 model, because we took buy side here, then the low was broken here, this low that took the low of the high that took buy side here was broken with displacement. This is the ICT 2022 model. You buy or sell the fair value gap, stop loss above here, you target sell side liquidity, the swing lows here. You can just measure your London low, the lowest low that was created during London, and your highest high before the change in state of delivery. You get the midpoint of that. That's your something like this. And then below 50% is your equilibrium. So we move from premium to discount. So you target this swing low. Okay, it was already jacked here. So this is your first target. Then you go on and those swing lows, you extend them out, and then your London low. Because I was already bearish for the day, I was not just trading a retracement, but rather it's a reversal kind of thing, because I believe New York was going to be in the opposite direction of London, because London reached that high time frame PDRA, which was the 4-hour CB in this case. So I knew that New York is going to be a reversal, and pretty much the job was pretty much done to the upside. So we had more job to do to the downside. Okay, so in this case, you saw it went all the way down. I took profits here, and I showed you how this was my silver bullet entry. This one. On this case, I'm on a 5 minute chart. So the ICT 2022 model was on a 5 minute chart, silver bullet. And then this is a measuring gap. Basically, a measuring gap, sometimes if like we are moving from a high PDRA to another PDRA. In this case, those relative equal lows were the previous week's low, so it was significant, right? So first thing is to actually take my profits here. I will measure the swing leg, the manipulation. So the swing low. So you have a high, low, higher high. Then now we have a lower low here that broke structure. So this low to that high is your manipulation leg. So I measure with my Fibonacci from the swing high to the swing low. Then I extend them out to get the standard deviations. And I know that -2 and -2.5, those are my reversal zones, right? So I might get like a retracement. So that's why I actually took majority of my profits. I think somewhere around -2 standard deviation. I closed everything here because it was not aligning with the previous week's low. So in this case, I knew that the macro here could be a reversal, and then we might, take out this previous week's low, which is the best case terminus during the PM session, because these Fibonacci levels, they're not overlapping with this low. So it was like kind of giving me an idea already that okay, we're gonna see a retracement because this is a reversal zone. So if you measure, let's go back here. I'm gonna 3 minutes chart, but it's the same thing. I'm gonna take the high and the swing low here, and then I'm gonna do, you can screenshot these settings. These settings is what I use for extending, for projecting my reversal zones. So I'm just gonna move this to the side. So I actually don't like them extended out like that if I'm going to be projecting. So -2, -2.5, you see, -2.5, this is my reversal zone. Now, if you confluence the reversal zone with the time, because it's time before price. Now the time we made it to the -2.5 at 11:03. Now already the macro is activated at this time, and then you see this bullish market structure shift. Already you've hit your reversal zone, right? So it confirms that okay, the macro is gonna be in the opposite direction of the New York AM, right? So we are looking for trading stops, and then we are going to be targeting any premium PDRA on the most recent uh, price leg on 5 minutes, right? So it went all the way up, and then New York lunch hour from 12 to 1:30, it was just moving to upwards, and then constantly taking out buy side, buy side, buy side, and then once we actually made it to the PM session, which was 1:30 to actually 4 o'clock. New York PM session 1:30 to 4 o'clock. The true session opened at 1:30. It was this candle here, and then we extend that out. We made relative equal highs. We took buy side, and then there was displacement. So if you look at this fair value gap here, we actually closed below it here. So we can just sell the close of this candle, because already you can see the displacement giving you a signal. You put your stop loss above right there. This confirms that okay, we are now triggered again for that bearish movement. The continuation has already been established because we are now inside the kill zone, and the lunch hour is done. The lunch hour lows are here. They are also a draw on their own. And then we also have sell side here, and but most importantly, we have this sell side, which was the best case terminus. During the AM session, we failed to take it out, and now we have a relative equal lows across the morning session. So the New York PM session is a continuation. Now, if you look here, where is your silver bullet from 2 to 4? Because in this case, I showed you that this was going to be your silver bullet, right? Because this entry was found, if you look at the fair value gap, the fair value gap was created at 10:09. So it's inside the silver bullet hour. You trust the fair value gap, you sell it, you target, because it's a continuation, right? Of whatever narrative is already in place. So here, the 2022 model was already bearish. So silver bullet continuation, take profit. Macro, it's going to reverse. Lunch hour is going to be a reversal before continuation during PM session. Now your silver bullet hour begins at 2, so we'll look for a fair value gap in displacement. Fair value gap in displacement is going to give you an entry for silver bullets. Now we can have like a confluence. In this case, we have midnight open. So here in this case, it was beautiful, beautiful, beautiful. I don't know, guys. PM silver bullets here because they have that fair value gap in. If you look to the upside, this is balanced. You can't expect price to go all the way up already. Why? Look, price actually filled this imbalance completely now. It went all the way up, it went down, it went up again, took buy side above it, went all the way down and closed below it. So now this is like a balanced price range already. It's a BPR. So it's a support level. Once we are inside the silver bullet and you see a close below here, sell that shit. Exactly how I'm showing you here. And you can target sell side liquidity. That's another 4 hour. Okay. Like this is like the best one trade setup for life. You're trading session highs and lows. Lunch hour high is taken out because the lunch hour high was created here. We took those out during the opening. New York AM session open. We took the lunch hour highs out. We rallied, creating bearish market structure shift here. You don't need to retrace all the way up because this is a BPR. You can sell that close, target sell side here, and also you have sell side liquidity. These are lunch hour lows. These are lunch hour lows. So they are also liquidity. You can target those if maybe you're up for like a 1:2. But this was gonna be my base case 10 minutes, and then I was gonna just leave it there, take this and leave. But I did not trade the PM session, guys. But also I want to show you something because always when I do this, I always have S&P 500 on my left, you know. I want to see SMT divergence. As you can see here, there's an SMT divergence during the PM session. Let me show you that quickly on S&P 500. So this is the AM session on the S&P 500. Let me just zoom out. So this is the PM session, right? Okay, so all right, so let me just quickly go through the AM session. So this was a London silver bullet on the ES, right? It went all the way up to cut Asian highs, and then New York AM session came, and then something similar to what happened to Nasdaq happened also here. We took buy side, and then we created a bearish market structure shift, and this is an ICT model 2022, right? Now let's check. This happened during the 8:30, between 8:30 and 11, but this was a silver bullet because at 8:30, between like if you look here, the 9:30 Judas swing did not create a bearish market structure shift here on ES, right? It did not. So this was pretty much a consolidation. Then at 10:30 here, when this happened on the Nasdaq, then suddenly we get a bearish market structure shift. You can already see from this that okay, it's not willing to go lower, right? So okay, you can sell that, but I use this as a barometer to actually get like a gist of where the market wants to go to. And then it failed to actually make it to London lows during because London lows are here, right? Sell side liquidity here. It failed to make it to London lows here during the New York AM session. It failed. So this order block actually at discount, it pushed it higher, and then it was already time for the macro. The macro came in, then we saw a retracement, but the retracement was like kind of overzealous on ES because already the AM session did not have that range like how Nasdaq did. So that also shows you that during PM session, you're obviously going to be having S&P, I mean SMT divergence. So there was an SMT divergence with NQ because during the macro here, we went all the way up to take out the New York AM highs. Okay, but in this case, we failed to make it to New York AM highs right there. So we only went all the way up to this fair value gap, which then became a BPR. But in this case, we went all the way up. We took out New York AM buy side liquidity. Then during the New York PM session, let me show you. This is the PM session on the Nasdaq, and this is the high that was created. This is the New York PM high, and this is the New York PM high on ES. It's above New York AM buy side. Here it's below New York AM buy side. So this is what I call SMT divergence because it's telling you that Nasdaq is pretty much weak or it's heavy. So it's gonna be more explosive going to the downside, Okay, I cut this thing out. I'm not sure if it went all the way, but also ES um you can get an entry as a 60-star approach if Nasdaq is already falling. So you can 6 star approach ES in this case, and sell it if already Nasdaq. You can't find like a clean entry on the Nasdaq. Maybe you see this entry as not an maybe you didn't catch this entry that down here. You saw it melting. ES was going to give you a more cleaner entry, and it did give you that during I think around 1348. It was a fair value gap. ICT model 2022, because we took out the launch hour highs here, failed to displace above it. Bearish market structure shift closing below the low here, fair value gap, boom. You sell that fair value gap to sell the fair value gap just above, just above here, to that London to London lows down there, and that's your another 6 hour trade. Beautiful, beautiful, beautiful. Let's just zoom in on the ES and see. It was just beautiful, beautiful. And also you have a PM session, silver bullet here. Where you can break in market structure, fair value gap, boom. You sell that, or you can sell this order block here. Once you saw a break below it on retracement, you sell this order block. You're already bearish at this time. You're just looking for anything going all the way down, a continuation, boom, you take it lower. So obviously here I outlined and I showed you how the silver bullet time windows, that inside the New York London Open, sorry, inside the London Open, the same thing here during the New York AM session, 8:30 to 11, you highlight your highest high and your lowest low. You trade session liquidity during the PM session, you wait for price to purge one of those. And also you have the lunch hour high here, took that out, bearish market structure shift, then you target opposing liquidity. It's simple as that. Here, if you want to treat the macro, you look at what PDRA was respected. Sell side has been taken, new sell side liquidity. Guys, if we are going to be if you're going to be trading this model, there's going to be new liquidity being created close to maybe after hitting the PDRA. It's going to generate new liquidity, then you wait for that to be purged, then a bullish market structure shift, then you can trust that okay, you're on side, we are moving with the smart money. You don't just wait for this order block to be hit here and you buy it. No, you need to wait for a confirmation displacement. You might after you see this displacement, there's a fair value gap here. What time of the day is that? 11:15. So the lunch hour macro is already in. Where are your trade opposing liquidity? Buy stops, buy stops, buy side, sorry, buy side liquidity all the way up. When do you close this? At 1 o'clock, you can consider closing if you don't have like a target per se. But I'll just use buy side liquidity. Then 1:30, true session open, we rally, take this out, and then boom, bearish market structure shift, ICT model 2022, you take it to sell side liquidity. That's like me trading my one trade setup. So I'll be trading session liquidity, session highs and lows. That's it. You don't need anything else. This is what I do every day, and it won't stop. It won't stop. And then this is a silver bullet. You find the continuation, a fair value gap in displacement, then you can just use that as your silver bullet entry. You find that. So this is like time-based liquidity and time-based setup. So it includes all silver bullets. This actually video here, we just completed the course basically. I'm showing you how to trade the macros. I'm showing you how to trade silver bullets, SMT divergence, which is most crucial because it's the market is tipping you its hand that I'm actually bearish. I don't have the strength to go all the way up. I don't know. I don't know. Like after this, I really don't know, guys. But that's how I actually maneuver the markets, and this is like easy. You just need to go back test, and actually annotate exactly how I'm showing you here. This is how you annotate your charts, okay? Time, liquidity, imbalances, opposing liquidity, time, liquidity, imbalances, opposing liquidity, time, liquidity. It's just that, and you rinse and repeat. So here I actually highlighted and you know show you like I'm giving you like a gist of what my eyes were looking at. 4 hours CVA premium filled and used as a bearish inversion fair value gap. So here we filled the fair value gap fully, and then it was used as a support, sorry, as a resistance. Here we tested it, and then we also filled that fair value gap right there. And you look at the CE, went all the way up, came back below it. You look at the CE doing the Lord's work, confluencing with the fair value gap here and the bearish order block. Boom. Fair value gap ICT 2022 model, breaking market structure shift here. Boom. Continuation, silver bullet. Boom. Boom. -2, -2.5 standard deviations, reversal area, macro time, bullish market structure shift. You can buy it back and you target any unfold. Now, the measuring gap, I was talking about the measuring gap. The measuring gap is the gap the market leaves at the midpoint from one hard time frame point of EDRA to another hard time frame point of PDRA. So normally at the center, it just leaves a gap, and it's a measuring gap. It will not come back and fill that until later on. After, in most cases, it will fill this gap on retracement after this objective has been reached. I think, and I feel, and I hope that this session was very much insightful to you guys. I hope, you know, everything is clear. I tried, to make things, as simple as ABC. If it's not simple for you, it means you don't just need to go back and do your due diligence, do your homework basically. Because I also did my homework. This I'm able to now actually see these things like how I'm seeing them now. But this is the best of the best. So please go back and watch this video multiple times. And already the course is now almost complete. I'm trying because I don't have time, guys. I'm trying, but I pretty much talk about the same thing on all of these classes here. So this one includes the silver bullets, all silver bullets. So it's going to be here, 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 because how to trade the PM session, Forex, how to trade the macros, everything. So it's going to be here because here I'm showing you how to trade the macros. It's easy, guys. So it's just, it's full of everything. So this one will be one trade setup for life. I'm not showing you how to trade the PM session macros, right? But you can see the fair value gaps already at the right time. Boom, sell side. You can, like, I don't want to go deeper, but the job to the upside is already done. So you're just melting throughout the whole PM session. I think this is it for today, guys. The course will be done, will be up in due time, because I want to cover a few things on the core content, like the kill zones and the macros and what actually I look for. But basically, it's what ICT talks about on the time-based setups. But I just want to show you on the charts because I have the understanding, and that's what I'm actually landing and selling you. So yeah, that's it for today, guys. Yeah, have a good one. Please comment. And actually like the video, do whatever, leave your reviews there. If you got any questions, maybe you want me to record a video maybe answering some of the questions, then you let me know, then I'll do that. Thank you.